African debt is a painful subject for the continent, and in many ways, a dark one. No one dares give exact figures, but one thing is certain: Africa's debt is far more than it can afford. The loans of different types, with interest and without, and investments, most with conditions. As a percentage of gross domestic product and export earnings, Africa's debt, at least $417 billion by 2018, according to CEPS, and perhaps even more on average, is the highest among the developing regions. Various financial institutions, including international organizations such as the World Bank and the IMF, and the private sector, own at least 35 to 36% and 32% of Africa's debt, respectively. China, one of Africa's largest creditors, has a share of at least 20% as of 2018. But then the question arises: is such an indicator as foreign debt important to the economies of countries at all? There have been various criticisms of how loans are obtained in Africa and for Africa. The IMF has been accused of being predatory, keeping emerging economies in debt. On the other hand, the IMF has criticized the Chinese Belt and Road loans as being predatory lending. Since 2000, African countries have rapidly increased their borrowing from China, totaling $94.5 billion up to 2014, as they sought to end their dependency on the IMF and World Bank. China is a major stakeholder in the economies of many African countries, with a significant influence on many aspects of the continent's affairs. China's lending to African countries is part of a large-scale overseas investment boom, forming part of its quest to secure access to raw materials and become an economic superpower. As of 2020, the countries in Africa with the largest Chinese debt are Angola with $25 billion, Ethiopia $13.5 billion, Zambia $7.4 billion, the Republic of Congo comes in with $7.3 billion, and Sudan holds $6.4 billion. All of this has led to what many have called Africa's debt trap. This is a situation in which a debt is difficult or impossible to repay, typically because high interest rates prevent repayment of the principal. How will African countries repay their debts? Is there any way to stop taking loans? What do these huge debts mean for the citizens of these countries? Today, we're looking at pulling Africa out of the debt trap. I'm Tolulokwe Adeleru Balogun. Welcome. This is Business Edge. Joining me today is Taiwo Oyedele. He's the fiscal policy partner and Africa tax leader for PricewaterhouseCoopers. Taiwo, thank you once again for being my guest on Business Edge, and welcome back.
Thank you, Tolu, for having me.
Let's start with this, basically looking at debt in and of itself. Around the world, the US, UK, France, Germany, and Japan are the countries globally that owe the most in external debt. So yes, we can agree that everyone borrows. Why do countries borrow? Why do countries go to lenders, creditors, whoever it may be, to seek loans?
Yeah, thank you very much. I think that's a very good introduction. It's always important to put it in context and in perspective. That debt in and of its own is not a bad thing. And actually every country borrows, including the most developed countries around the world. So America, in terms of absolute numbers, has the highest debts. So debt in itself is not bad. Why do countries borrow? So because our needs are unlimited, whether we are individuals, whether we are companies, whether we are a country, whereas our resources are limited. So per time, when countries are running a deficit budget, in other words, you're having to spend more than you're bringing in terms of revenue, then you have to borrow to bridge the gap. And that in itself, again, is not a problem. We've seen that escalated in the past couple of years because of COVID-19, because the ability of companies and individuals to pay taxes have been significantly reduced, whereas governments are having to actually spend more than they would without COVID-19, and therefore they're having to borrow. So generally, countries will borrow either to try and cover recurrent expenditure, including paying salaries of civil servants. Sometimes it's to fight an epidemic. Sometimes it's to deal with, natural disasters like what we're having in Haiti now. And sometimes also is to deal with infrastructure or maybe even insecurity.
All right, so taking from there, the conversation is different when we talk about African debt versus the debt that the West has. As you mentioned, the US has over $7 trillion in debt. For the UK, it owes 1.95 trillion pounds. And in 2020, it became larger than the size of the country's economy for the first time in 50 years. There are conversations going on there about their debts as well. But when it comes to African countries and external debt, the conversation tends to take a different tone. Have you noticed that tone? What do you think is responsible for that? Why do we talk about debt and external debt differently when it comes to African countries?
Yeah, I think a number of factors. Number one is when the likes of the UK and the US or Japan, when they borrow at next to nothing. Sometimes some of these countries like Japan even borrow at negative interest rates. In other words, you're borrowing $1 million with the understanding and the agreement that you pay back less than $1 million without interest, right? So which means in terms of sustainability and the ability to afford the debt burden, it's quite easy for them, even though you may have the debt being more than their GDP. When it comes to Africa, it's a different ball game. Number one reason is African countries are seen as high risk in terms of their revenue because their revenue is volatile. Volatile because many of them depend on natural resources. They cannot control the price, they cannot control the volume, and it just keeps moving up and down like we've seen with oil, for example. So the likes of Zambia, for example, also relies heavily on natural resource and they were not able to service their debt. They actually defaulted and it became a big crisis. So that is one aspect. So which means when African countries borrow, they tend to borrow at high rates, even sometimes at double digits. Now, the second issue, which compounds that, is that because of this volatility and weak economies, our currencies are not stable. So even when you borrow at $1 million, you borrow $1 million, say at 9%, and you're struggling to even find the 9%, before you know it, your local currency devalues even further against the US dollar or other foreign hard currencies. What that means is in local currency terms, you may as well be spending 50%, if not 100% of the amount you borrowed in just servicing the debt. And then that becomes unsustainable. And if you're not careful, you get into the debt trap.
Very interesting. And I think many people would have heard for the first time that there's something actually called a negative interest rate. And there are countries around the world that could actually pay less than what they borrowed. So Tyrell, let's pick up from that. So we're looking at this as foreign debt. But how important do you think this foreign debt is as an indicator of a country's economy? Is it something that we should be focusing on? Should we be focused on African countries' debts in absolute terms or in terms of their GDP and the economic power they hold?
I think that we should be focusing more on what African countries are spending the money they borrow on. Because really, a sovereign, in terms of your debt to GDP ratio, in principle, you may never have to pay it back. Okay, so look at the US, for example. They have no plans of paying back the debt. So the debt will always be there. They refinance it. One is maturing, they reissue another one. So you can actually have those debts in perpetuity. So what is really of concern is what are you spending the money on? Because what you spend the money on determines your ability to service the debt. If you borrow to pay salaries, if you borrow to pay interest on another loan to refinance it, if you borrow to try and fix issues around insecurity, if you borrow to do palliatives and all manner of social transfers, those are not self-financing. You will not be able to get the money to pay the interest from those projects. It's even worse that in many African economies, there's high level of corruption. So not only are these monies not spent for productive purposes, they're actually stolen. So which means the value to the economy is zero, but the burden is 100%. So these are the reasons why, for Africa, I think the main focus should be on why are we borrowing, what are we borrowing for, how efficient are we utilizing the money that we are borrowing, and under what terms. You said in your introduction there about concerns around the conditions, about borrowing from China in particular. And to be honest, my personal view is I do not blame anyone who wants to give you money and they put their conditions. I do blame African leaders for accepting conditions sometimes when they are not favorable and they're meant to be obvious.
And you've actually led me into my next question. So let's talk about who we're borrowing from. So available evidence shows that while credits from all Chinese financiers, including commercial banks and corporations, to African governments and state-owned enterprises exceeded those of the World Bank is still the largest official creditor in Africa. The World Bank confirms that China is the world's largest bilateral official creditor, that is the largest single creditor country. Then there is the Paris Club, while other bilateral lenders include Russia, India, and Turkey, but their overseas lending programs are smaller than China's. Is there actually a difference in how these institutions and at a point countries lend individually to Africa, or in the long run is it the same? Some have said that the IMF and the World Bank will put the conditions of privatization and liberalization of the economy. Some will say that China rarely asks questions and will just give the money, just give us access to raw materials. So in terms of also the Paris Club, which the loans from them have been decreasing over the past few years, is there a difference in how these entities lend to Africa or African countries?
Yeah. So I think every creditor has an interest. And we need to, face the reality. The reality is nobody is giving you money without, a hidden interest. So either they're trying to get you to do what they want, or they want something from you in exchange for what they're giving you. So, Nigeria, for example, number one, indebtedness in terms of foreign debt is under the IDA, the International Development Arrangement or Agreement. So followed by Eurobond, which is really just borrowing from the public, and then you have the IMF, and then you have China in number 4. So why African countries tend to find China easy? It's not really that China does not ask questions; it's that the questions they ask are the ones that African countries and governments are happy to address, sometimes out of ignorance, sometimes out of short-sightedness. So somebody is saying to you, I'm going to give you $1 billion, use it to build rail, but I'm going to bring my people to build it. So I'm going to give you the XYZ condition of your raw materials. And those things just look easy for African leaders to say yes to. And then they go ahead and get into this, and sometimes they find it difficult to meet those terms. Whereas if you were getting money from the IMF, World Bank, or the West generally, they tend to be focusing more around governance. They are focusing on transparency.
Human rights.
So they're focusing on human rights. So a typical African leader would rather just exchange raw materials and allowing Chinese to come and do the project in their country than committing to transparency, because they intend to steal part of the money. So that doesn't work in their personal favor. So this is a major distinction between, I'll say, the West and China, for example, in my view.
All right, so very quickly before we go for a break, both sides, when we stay on this lending conversation, particularly the Bretton Woods institutions of the IMF and the World Bank, as well as China, have accused each other of predatory practices when it comes to loans for Africa. What do you think of this? In terms of predatory, this is basically taking more than undue advantage, because as you said earlier, anyone who loans you will put conditions in terms of how much they can bring back, they can get back from you, because it's your money. It's their money that you're asking for. But when it comes to the predatory accusations, whether it's the IMF, the World Bank, or China, what do you think of those criticisms?
Yeah, I think those criticism is like, I'll put the analogy of pointing one finger at someone, the other four most likely will be pointing towards you. If you're looking at who is making Africa get into this trouble, just look in the mirror and it will be African leaders. So again, if I'm going to give you a loan to look And because you are desperate, I put all manner of terms there. Either you haven't read or you haven't read carefully, you haven't sought for someone who has the understanding to help you. We've heard in Nigeria when government signed contract that were written in Mandarin. So they couldn't even read Chinese language, but they signed. The only difference is because it was in Chinese, you knew they didn't read. Because even if it was in English, they may not have read. So the problem is, I don't think, to be honest, is the other person asking for all the benefits. It's for you accepting it. You are a sovereign nation, for God's sake. You can decide what you want to accept and what you don't want to accept. China themselves have gone through this process and they came out strong. So I don't think we should just be blaming them for our deficiencies in Africa.
All right, Taiwo, we're going to hold the conversation there. But when we come back, let's get into solutions. There are a lot of points that have been made in terms of understanding and accepting negotiations and contracts. He's also inadvertently mentioned the value chain and how African countries are dependent on natural resources that they don't control on the international market. But how do we solve Africa's debt trap? Indebtedness to the world is causing African issues. We'll be back on Business Edge. Still with me is Taiwo Oyedele, Fiscal Policy Partner and Africa Tax Leader for PwC. Now, Taiwo, we need to get into the solutions part of this conversation. But before that, let's quickly talk about defaults and risk. Africa debt levels have been on the rise for the past few years, and COVID-19 has just worsened the situation. We saw many presidents say that the world and lenders needed to extend some kind of extension of payment terms or even forgiveness, debt forgiveness, because of COVID-19. But in a recent report from the International Development Association, Nigeria ranked 5th among the top 10 countries with the highest debt risk exposure. Other countries on the list: Ethiopia, Kenya, Tanzania, Ghana, and Uganda. We also saw Zambia recently default, and there are questions about whether or not Angola may not follow in that line as well. So when it comes to African defaults and debt exposure, especially 2021, recovering from COVID-19, what do you think we need to look out for?
Yeah, thank you. Yeah, so you're right. So on that list provided by the World Bank, we see that African countries are 6 out of the 10. So essentially, this is a facility that is only available to developing countries around the world, I think about 74 countries. And then what they just did was to provide a list of their top 10 borrowers. And Nigeria is top in Africa, and along with 5 other countries, making 6 out of 10. So I do think that in terms of trying to look at these issues, some of it you can understand, some of it you can justify, some of it you can excuse, because we are in a particularly difficult time because of COVID-19. We're needing to deal with issues around, lack of liquidity for FX, lack of revenue for governments, while they're having to as well take care of companies and individuals that are vulnerable during this period in time. So, but essentially, in terms of addressing these issues, I think that African countries have to look for a medium to long-term solution. So most of the times what you find is people are in government for 4 years and they only focus on 4 years. They don't think beyond that. Some of it is ultimately you have to develop your economy. If your economy is developed, it means that your GDP can translate into revenue for government, and you'll be able to use that to provide, to fund government, essentially, whether you're talking about capital expenditure, recurrent, or even debt servicing. So this is what African countries need to do. We need to move away from reliance or excessive reliance on natural resources to fund our government, because this is, like I said before, completely outside of our control. And that makes it difficult to plan, which then leads to all these issues of borrowing, excessive borrowing, leading to debt trap in some cases.
Okay, so we've talked about international creditors or lenders, depending on what terminology you like. But we also have African lenders, even though they may not have the same capacity as the international ones. There's the African Development Bank. We have the Africa Import-Export Bank as well. We also have the AU in terms of their capacity to sort of take a bit of the space when it comes to giving loans to African countries versus us either going to the West or the East. What do you think about that?
That will make a lot of difference. So I think AFDB, for example, is probably our fifth creditor in terms for Nigeria for external loans. So what happens also is, so these organizations are also funded by almost the rest of the world, I would say. And sometimes you find the like of AFDB also going to the market to go and borrow. So the only advantage you get from these organizations within Africa providing those credit facility is that many of them have better credit rating than even some countries. So while Nigeria will borrow at, say, 9%, AFDB may be able to borrow at 3 or 4%. So which means even if they put a margin of 1%, that loan gets to Nigeria at a more affordable rate. Other than that, African countries of themselves do not have the resources to support one another. So they still have to rely ultimately on external sources of funding, which takes us to the question of, are you able to get debt waiver and forgiveness? And for many of them, where you borrow from the international development agreement or arrangement, you may be able to get something out of it. But if you borrowed in terms of raising Eurobond, nobody's going to give you any waivers because these are just investors. Many of them had invested pension funds, so they're just individuals and institutions investing. They will not waive anything. And Africa needs to start thinking differently, not expecting that every single time they borrow and then they go hand in cap and begging for forgiveness.
I think that's a valuable point. So I want to go back to something else you talked about, and that's negotiations and reading of contracts and the fact that for 4 years, a minister will be there and sign a number of loans that it might take decades and generations for a country to pay off. In terms of what African countries need to look for, while we are going cap in hand because we want to finance our budgets, we want to shorten our infrastructure deficits, we need to be wary of certain conditions. What do you think African countries should be looking out for when it comes to negotiating some of these loans from international lenders and even countries?
Yeah, and I think the most important thing is just putting their best foot forward. So you find people who go and negotiate these things with little or no knowledge. So they're just signing off anything and everything you ask them to sign without really understanding them. So if you put your best foot forward, get your most competent people. So they may be Nigerians in diaspora, they may be Nigerians in the private sector. Get the right people to be on the table to make these negotiations. For some of us who have learned about negotiation, you would understand some of these issues may not even be issues that are documented. It could be your approach, it could be cultural issues, and so on and so forth. Number two, maybe even more important, is the fact that we need to look inwards and say, where can we find efficiencies in terms of our spending? Where can we reduce wastage and corruption? Where can we be creative? Why are we borrowing to build, power plants? Why are we borrowing to build refineries? Why are we borrowing to build rails? These are commercially viable. Even in developed countries, governments don't do that. So if you take all of those burden off the public sector, allow private sector to do it, they provide the funding, they run it efficiently, they make money, they pay taxes to government. Not only have you saved yourself from borrowing, you've also created a new avenue for generating revenue. So I think these are the more fundamental questions that we need to start looking at differently in Africa.
All right, Taiwo Oyedele, thank you as always. It's a pleasure to have you. I know this conversation will continue. The IMF has said that sub-Saharan Africa's economies will contract, and it's considerably worse than anticipated in April. So this debt sustainability and debt forgiveness waiver and repayment conversation is one that will be with us for a long time. So we'll definitely be touching base with you. Thank you so much, Taiwo.
Thank you for having me.
And it's a conversation that will not end. High unemployment rates, low purchasing power, low exports, low productivity, and the fact that we do not control the value chain, so we're not getting as much as we should. African countries have a lot of questions to answer when it comes to debt and loans. We'll be keeping the conversation going right here on Business Edge. Up next is NC4 to watch as we wrap things up for today. And for a few stories we're keeping our eyes on, we start in East Africa, where Kenya's foreign currency holdings declined to a 7-week low in the last week, according to data from the Central Bank of Kenya. The reserves fell to $9.296 billion on August the 12th from $9.352 billion on the 5th of August. According to the bank, the Forex reserves are adequate to cover 5.6 months of import, down from about 5.7 months of import cover. And we stay in Kenya for the number 2 on our list. Now, Kenya's weekly Mombasa tea auction that held recently had 11 kilograms of tea offered for sale. The amount on offer decreased from 12 million kilograms offered during the previous sale. The Kenya Tea Growers Association, the umbrella body for multinational firms, has written to the East African Tea Traders Association, which manages the auction, informing it of the decision just a month after the states introduced reserve price for smallholder farmers. Moving on, Egypt plans to take the first steps towards selling a stake in the state-owned company behind its new capital city early next year. And this could be the North African country's biggest initial public offering ever. President Abdel Fattah al-Sisi said that the company has 100 billion pounds in liquid assets and up to 4 trillion pounds in total holdings. And finally, we are in West Africa, where the Central Bank of Nigeria has said that the country's inflation rates may drop to a single digit in 2022. The CBN said that since the Nigerian economy recovered from recession in the last quarter of 2020, it had maintained a path of recovery despite challenges triggered by the COVID-19 pandemic and insecurity. And that's the show for today. Don't forget to follow us and subscribe to our YouTube channel so you don't miss any of the conversations on the business, economic, and financial news coming out of the African continent. You can follow us on all of our social media platforms. And of course, we are streaming live, and we're live on StarTimes channel 274. We are also, of course, available to you on our app. Download our mobile app on App Store and Play Store and take us with you wherever you go. I'm Tolu Lokwe Adeleru Balogun. I'll see you again soon.